All right, folks, yesterday the Senate Banking Committee just yanked the Clarity Act off of the calendar like a waiter grabbing a flaming fajita that just set the tablecloth on fire. 24 hours ago, we were promised a grand regulatory unveiling, and then Coinbase slammed its coffee on the table and said pass, and then suddenly this markup to the Clarity Act vanished faster than block rewards after a halving. The crypto lobbyists, they were rehearsing their victory tweets. We know that the Wall Street banks were quietly sharpening their knives, and then Brian Armstrong barged in, wrote a masterpiece long-winded tweet that read like it was ghost-written by the SEC's enforcement division. So the committee phones lit up, and then the aides started to swap their frantic emails, and then the chairman flipped the big red postpone switch. So why does this matter? Because the same Congress that greenlit the $1 trillion deficits, now they want to referee digital money, and they just tripped on their very first play. This bill tried to split the baby between the SEC and the CFTC, and they tried to choke the stablecoin yields because the banking lobby has been giving Congress tremendous lobbying pressure, and then they basically told tokenized equities to take a hike. So Coinbase, the poster child for regulated crypto, they called the draft worse than wandering through Gary Gensler's dreams. Welcome to the future of finance, built in real time, live on C-SPAN, with the lobbyists, of course, as the orchestra that's tuning up. So stay tuned. The next act of this story could mint or mangle $2 trillion in liquidity. So we need to go over the Clarity Act basics, okay? What is this framework? What is the elevator pitch to Congress wrote on a cocktail napkin? Well, let me tell you. The Clarity Act is really trying to carve the crypto universe. I hate that word crypto, but it's true. It is the crypto universe. They're trying to carve it into these two bureaucratic slices, essentially. They're trying to say that anything that wiggles like a commodity gets to be tossed to the CFTC, and anything that smells like a security lands on the doorsteps of the SEC. That's simple in theory, like separating pasta from the sauce, except every token is a lasagna layered with governance, with yield, with memes, so you gotta expect a lot of food fights in Congress. And then the next ingredient is stablecoins. This is the big enchilada, because stablecoins with yield, unfortunately, that makes a lot of the banks totally irrelevant. I've talked a lot about this on the channel, the conspiracy theory, Trump and his ilk kind of look into stablecoins to take power away from the Fed. So the bill stapled last year's Genius Act, if you remember that, to its chest, and then they said, great, we've got a heartbeat, the same dollar peg tokens, but now with fresh handcuffs on the yields, and we don't want that. The lawmakers, they are seeing Coinbase earn more on USDC than regional banks made on checking accounts, and decided that the music was too loud after midnight. They can't have any of this. It's too much power away from the banks. And then you're seeing the consumer protection language popping up throughout, paired with these national security buzzwords. So think moral panic meets Patriot Act life. They want background checks on DeFi smart contracts, yet they can't get the Senate Wi-Fi to connect without calling IT 3 times. And finally, this is actually the Senate sequel to the House's HR 3633 blockbuster, because remember the Agriculture Committee, they already pressed pause because the farmers trading corn futures on chain apparently needs meditation time. So bottom line, Congress is now hoping to box crypto with color-coded tape, but the boxes keep teleporting everywhere. So if they nail this split jurisdiction, that could unlock a lot of capital to flow to these assets. But if they miss, well, unfortunately, that means we get regulatory Schrodinger's cat, which means alive and dead guidance at the same time, which would probably mean worse than the status quo, and that's what Brian Armstrong is kind of saying here. So now to give an update on these contentious draft provisions that are really driving the opposition, and this is what makes us mad as the Bitcoiners who just wants this to be over with. So as I toured the landmines that were buried in this draft, the first one I found were the tokenized equities. So Washington basically looked at some future where Robinhood shares live on chain, and then they said, cute experiment, please step away from the printer. The clause reads like a cease and desist on stock tokenization, which is a direct hit on firms building programmable ownership that trades 24/7. So imagine banning Spotify because vinyl still exists. And then next up were those stablecoin yield restrictions. Coinbase pocketed $355 million last fall by paying savers more than their local credit union. The banks will continue to lobby, and unfortunately the senators continue to listen, so the politicians are the problem, and the text now caps or deletes those juicy rewards. If you take away the yield, you convert a sleek digital money market into a dusty prepaid card, which is why TradFi will continue to cheer while the crypto Twitter goblins will continue to scream regulatory protection racket. And third is the DeFi protocol Oversight. This is important because this bill, it orders decentralized protocols to register, report, and basically perform daily yoga with every compliance officer alive. Great for the lawyers out there, but that's really terrible for two engineers who are running their own thing from a Discord server. The cost curve tilts from garage hackers to giant consultancies instantly overnight. And so finally, we look at this power shift toward the SEC. There are pages upon pages of this subtle language. They're nudging everything toward the SEC. They're trimming the CFTC's turf until it looks like a postage stamp. So the market structure geeks out there, they fear that we are getting the worst of both worlds, which means the securities rules without the securities clarity. And Brian Armstrong called this erosion, and the industry folks are calling this a jurisdictional land grab. So if you add all of these things together, it's pretty easy to see why Coinbase totally bailed. They said absolutely not. This draft would freeze the tokenized innovation that's happening. It would starve the stablecoin economics out there. It would drown DeFi in paperwork while crowning some regulator king. So the stakeholders, they're literally deciding that they would rather gamble on today's gray zone than lock in some rule book that's going to sandbag the future. So this is the pressure cooker that's happening behind this sudden postponement. So when you take Coinbase, you know, the 800-pound gorilla in a hoodie, Brian Armstrong, he spent 2 days reading the draft. He closed the PDF and he told the Senate hard pass. He posted on X that this bill was materially worse than the status quo that we have now, which in DC speak means that the legislation drives a flaming dump truck through his revenue model. And when Coinbase steps away, that means that the Senate staffers lose their most credible yes vote from the entire industry. And that's when this bill's halo starts to dim in real time. Think of the committee having a delicate Jenga tower of support and Brian Armstrong ripping out the center block. And this just goes to show how much our politicians are just inefficient. You know, this instant postponement is literally just a reminder that in crypto politics, a single corporate tweet can blow up months of bipartisan choreography. Welcome to the 21st century governance where a NASDAQ-listed exchange flexes veto power over federal law. What a glorious thing to behold. So when we look at the political dynamics here, Capitol Hill is a three-ring circus. Center stage is Chairman Tim Scott. He grabbed the mic and called this postponement a quick breather. You know, he's promising this consumer protection, the national security buzzwords, and the future of finance staying red, white, and blue, the United States being the crypto and Bitcoin capital of the world. You know, the same old buzzwords. So let me just translate it for you. This bill is on ice until the biggest donors and the loudest lobbyists quit throwing elbows in the hallway. And in ring two, this is the important one, the ultra-powerful banking lobby. They love these stablecoin yield caps because every dollar that's parked in a token leaves a hole in the deposit coffers for them. The banking lobby's talking points read like bedtime stories about this systemic risk. It's just risk to their own wealth and control of money. And then the crypto firms, they're seeing these caps as this regulatory kneecapping, obviously. So they're going to hire more consultants. And then the Senate inbox, you know, it just fills with these conflicting PowerPoints formatted in 11-point Calibri. And then you have a ring three, the market analysts out there. Benchmark Securities labeled the delay a positive development. They said that breathing room beats rushed policy. Yeah, sure, I guess, even though they've been working on this for forever. Wall Street, they hear the word delay and then they're picturing extra months of trading volatility, and then they're quietly popping their champagne bottles. So every single stakeholder is going to be rewriting their strategy PowerPoint decks. The banks are going to push for stricter yields. The DeFi foundations are going to draft compromised language, and the congressional staffers are going to scour Reddit to predict the next viral outrage. There's nothing new necessarily, just the same old sludge that we always get from Congress. This continuing drama just proves that a single committee pause can turn financial regulation into a live fire political science experiment, and the experiment continues to get yet another extension. The bottom line is that crypto now, it's starting to influence Senate calendars, the way that oil once did, which is bullish for Bitcoin. So the next headlines, they'll eventually have to tell us to confirm to America if we are the jurisdiction of choice for digital assets or to continue to push the development offshore. The traders are going to have to watch the committee schedules as closely as their CPI prints, because we know that history is being hashed out right now. Block by block, vote by vote, grab popcorn, but one thing is obvious: Bitcoin is taking the power away from the central banks. And watching this being argued in Congress, it could not be more obvious. This is just bullish for the asset. We see the banks in full-blown panic mode, and really there's nothing they can do about the orange singularity. My name is Adam Livingston. I am the Bitcoin Wizard. I hope you appreciated this content. Please like this video and subscribe to Swan Bitcoin as we bring you daily content with more energy than anybody during the greatest wealth transfer in the history of humanity. Have a terrific day. Class dismissed.